probably increase or get close to a peak and then decline. Fundamentally, we think that quick commerce story, while very exciting, it's the focus area or the TAM is going to be limited eventually. The economics will catch up, at least last half decade when fintech hasn't been in the forefront. 2023, it raised a crazy amount of money. It was the hottest sector. It was $3.5 billion. 2024 deal activity has slipped by 20%.
Hello, everyone, and welcome to the first episode of Founders Unfiltered in 2025. We want to start off the year by talking about our predictions, but first, 24 was a crazy year. And Aviral, actually, in terms of our predictions, we did the best we've ever done. We gave ourselves a 9.8 out of 10. So I want to jump right into it and talk about each one. So first up, our first prediction was at least 3 new VC funds will start with $10+ million in fund size, while larger funds will downscale.
Yeah, I mean, I think this is kind of self-explanatory. In fact, we started a fund too. In fact, I think there are more than 5 VC funds with an 80 crore AUM this year, and there are more than 10 new funds. Emerging fund managers have started appearing at a rapid pace, while the large funds are starting to downscale as well as return capital. So our prediction was spot on.
Yep, no, quite straightforward. So we nailed that one. Next was open source AI startups will break out from India, helping to raise more than $300 million and making it the fastest growing VC segment.
Yeah. I think our prediction was AI would be the fastest growing VC segment with 300 million plus raised. Open source AI would be the enabler. All of this happened again. Sarvam AI raised 45 million, Krutram raised 50 million. Open source together was at about 100 million. Generative AI raised 200 million, growing 6x from the year before. It easily was the hottest sector this year, and it's growing even faster, I think.
The third prediction that we had was that Bharat startups will break out and scale, with at least one being valued at more than 500 million.
Pocket FM became a unicorn, or close to one, I think. People debate on its valuation, but clearly it was worth more than 500 million. Shri Mandir was valued at north of 100 million. VC funds have made Bharat a focus area as well. I think there's a new belief that microtransactions are a way to make money from India, which probably was not something people believed before.
The fourth one that we had was that consumer brands will cross $100 million in annual revenue.
So the $100 million with annual revenue and being CM3 positive. So there was a profitability angle here as well. Last year we saw Bluestone, Wakefit, Atomberg, Country Delight and Go Colors all cross about 800 to 900 crores for the first time. Not only are they growing fast, they're also profitable or close to profitable, which means that they are CM3 positive. CM3 is actually the third level of contribution margin, closest to net profit. And I think the last year was actually a fantastic year for D2C brands. It was probably a breakout year for many of them in the category.
50% of tech unicorns that IPO will be profitable. There'll be a focus on profitability in the markets.
Yeah, so profitability was the focus last year. There were 10 tech unicorns or 10 companies that went public. 3 of them were unprofitable, which was Ola, FirstCry, and Swiggy, while the remaining 7, which is GoDigit, Office, Ixigo, FirstCry, TBO, MobiKwik, and Unicommerce, they were profitable. Discipline is coming.
The last prediction was that semiconductor startups will raise over $50 million in order to scale.
Yeah, I think here we were slightly off the mark. They actually raised 40 million across 20 companies. Close enough, I would say, but we didn't get full for this one. Indian startups have started to pick up. There are many who raised more than 2-3 million. A lot of small ones have also started. It's going to be interesting for the next 5 years.
Yeah, and so that wraps up our 24 predictions. 9.8 out of 10, 9 out of 10 on the semiconductor one. So Yeah, we did quite well. And so let's jump into 25 for our listeners. Let's walk them through each one at a time. First up, there was a prediction about quick commerce, which was quite a hot segment in 24. Walk us
Yeah.
through that one.
Yeah, so we think next year will be one where there will be pain because big players will get in, there will be consolidation, and we expect funding to peak in mid-year. So it will probably increase or get close to a peak and then decline. Fundamentally, we think that the quick commerce story, while very exciting, it's the focus area or the TAM is going to be limited eventually. The economics will catch up. The large players who have better logistics will come in. All of these three factors together will make the industry have some sort of, you know, calming down or reset next year. There's only a certain limit to which we think the companies will be able to go to. We expect the TAM boundaries of 15 to 20 cities. Beyond that, it'll be hard. In fact, a lot of people have already started to, notice dark patterns. They're starting to say this has become expensive. Companies have started becoming slower in their delivery. Um, so on the customer side as well, on the experience side as well as on the cost structure, all of these things will start to catch up next year. And we think that, the lot of companies that have broken out this year or are starting this year saying that they'll be quick commerce for apparel, quick commerce for food, they will all have to look at the drawing board again.
Yeah, that's an interesting one. Next up, we had a prediction around AI and specifically that vertical focused AI will see more than 4,000 crores of funding with more than 100 startups disrupting the SaaS model.
Yeah. We think this year will be vertical AI. So AI for CAs, AI for research, AI for compliance. That's like a vertical focused AI. That's what we mean by that. So take a particular sector and apply AI to it. We think funding will cross 4,000 crores for this, and there'll be more than 100 plus startups trying to build in this category. They're all going to go after SaaS revenue and SaaS profitability, which is verticalized SaaS. AI will probably be a more cost efficient as well as a faster delivery model than SaaS. We think a lot of Indian companies will pick this up and they'll build variants of this. They'll also build agents that are focused on this as well.
I'm curious about why traditional SaaS companies can't adapt to add an AI element.
Yeah, I think it's an interesting question because it seems like you can easily do it, but fundamentally, when technology shifts happen, there are two things that make an incumbent not very well placed. The first is they're a large hunkering ship that's hard to change direction, while a small nimble boat can do it. So it's just easier for a new company to change course. Um, that is what hobbles a lot of large companies eventually, and that's why they can't move. I think the second thing is AI has flattened the playing ground for everybody. So for a new company to build an AI and for an old company to build an AI, they're probably starting almost at the same level, with the larger company having to deal with its large organization that's built in a certain way. Taking it all apart and making it AI focused will be quite hard. So it's a game of speed, and the larger companies will struggle. That's why smaller companies will have an advantage.
Third on the list, we had that fintechs will not be in India's top three most funded sectors in 25, which, it's consistently been one of the top funded sectors. So
Yeah.
why is that?
So fintech, I think for the last maybe 5 years has been in the top three, even before. I can't think of any year in at least last half decade when fintech hasn't been in the forefront. In 2023, it raised a crazy amount of money. It was the hottest sector. It was $3.5 billion. 2024 deal activity has slipped by 20%. Fintech exits have dropped. Fintech verticals are struggling, payments, lending, everything. Um, we are also seeing much lesser activity at the earlier stages in fintech too, which makes us think that there's potentially a challenge that's going on in the space. So there may be consolidation. People are chasing profit pools now. Nobody is able to find them. The valuations of the larger companies have become too large. They have to grow into them. So we expect that there's going to be a decline. Probably the only subsector that picked up for fintech last year was wealth tech. Apart from that, everything else has fallen. So we expect that it will drop out of the top three. Fundamentally, we think it'll probably be like a mix of SaaS, AI, consumer retail. These ones will probably uh, pick be in the top three, but fintech will drop out. There'll be lesser big rounds, there'll be lesser rounds, lesser companies. That does not mean that there's no opportunity in fintech. It just is that there are way too many players now. There has to be some sort of consolidation, which will happen this year, and it's all cyclical.
Talking about cyclical, somewhat similar to the prediction we had last time, but we've had the markets correct quite a bit. We predicted that there'll be 10 plus startups that will IPO, with 50% of them being profitable,
Yeah.
despite the economy slowing down overall.
Yeah. So, not a lot of people actually believe this, to be honest, that the markets will correct and the economy will slow. Everyone's like hedging their bets. We think next year will be slowing economic growth as well as markets correcting. Generally, this is a bad time to go public. That's why we are saying that despite this, there will be 10 plus startups that will IPO. I think fundamentally, the public markets have matured. India, in fact, was one of the most active public markets in the world. Probably, uh, if I remember correctly, the most active from a deal perspective and the second most active from a deal value perspective. Like the number of public companies, it even beat the US last year. So it was quite crazy. We think that momentum will remain. A lot of retail investors have got an appetite for this. A lot of institutional investors want more access to the tech ecosystem. India's public tech market is not very large, so the number of companies increasing the consideration set will be good. We think there will be a lot that will go public. 20 plus have said that they will. Obviously, not all do, but we think at least 10 will. And more than 5 of them will be profitable, at least EBITDA profitable.
The next one is a unique one. We predicted that jewelry startups will raise more than 2,000 crores in funding, with 5 new startups that will debut
Yeah.
in the next year.
Yeah, so it's a niche category, but it's one of those D2C segments that has seen phenomenal outcomes. Carrot Lane, for example, was probably one of the largest exits in India for a founder. It would be in the top three, and the company was valued at 25,000 crores. Bluestone is planning to go public next year. It will contribute to the funds raise that we are thinking of if they end up going public. I'm pretty sure that they will. And the category in itself is quite interesting because Indians are getting wealthier. Jewelry is very, very important for Indians and Asians in general. I think that the shift towards more purchasing of jewelry is going to happen. We think that the segment which is looking for a higher frequency of purchases as well as more fashion jewelry available to them will grow. And it's been one segment from an investment perspective that has returned phenomenal value. So investors will come in, founders will come in. We think at least 10 startups will get funded next year, and we're thinking investments will cross 1,500 to 2,000 crores.
And our last prediction for 25, manufacturing tech will see 1 IPO and 2,000 crores in funding.
Yeah.
Almost like a comeback.
Yeah, correct. So, manufacturing tech had a fantastic 2021, but then it just like fell off the radar. Um, we think that there could be a turning point in this year, at least from a funding perspective and a IPO perspective. There are quite a few candidates that could potentially go public next year. We also think that they'll end up raising pre-IPO money or IPO money that will contribute to this. The most well-known, obviously, is Network, which is worth close to 25,000 crores. They've been growing well. They are saying they could go public. We also think that there'll be early stage funding rounds that will follow this. There are a lot of young companies that are also building in this category. So fundamentally, we think that the space will have a better year next year, at least compared to this year.
Yeah, so thank you so much for walking us through the predictions for 25. Certainly sounds like it will be an exciting year with a focus on profitability. AI, of course, we expect it to continue to grow. Just to wrap up, any thoughts for 25 for a junior VC or personally that you want to share with our listeners?
Yeah, I think I just recently wrote a post on reflecting on 2024 that a lot of people wrote into. Um, this next year, personally, and AJVC are quite linked because we've started the firm. Um, I think it's going to be an interesting year. There are going to be a lot more entrepreneurs than I expect. Um, we want to back a lot of teams, and hopefully, some of them will start to break out in the next year. So I think the next year for AJVC will be one of growth, and I think that will be the case for at least 2-3 years. After which we know we'll have to start seeing some of our companies, starting to break out and build a portfolio as a fund. So it's an exciting year ahead. We've just started this year, so the next year will be interesting. Hopefully, our predictions also do well.
Thank you so much, Aviral, for walking us through it, and let's see what 25 brings. And thank you, everyone, for tuning in.